The collapse of Silicon Valley Bank, SVB. Silicon Valley Bank was a relatively small bank that was highly regarded in the tech industry for its aggressive lending practices and willingness to take on riskier investments. However, in recent weeks, reports started coming in that the bank was in trouble, hemorrhaging deposits, and its management was scrambling to raise capital. Then on Friday, March 10, 2023, Silicon Valley Bank collapsed. The SVB collapse marks the second biggest bank failure in U.S. history, which raises sharp concerns about the stability of the banking industry. Banking is an industry that relies on trust and confidence, and the failure of a bank, even a relatively small one, can fatally erode trust and set off a chain reaction of panic among depositors, triggering a frenzy not only nationwide, but also worldwide. There are several factors that contributed to Silicon Valley Bank's collapse. For one, the bank had made some risky investments, such as investing heavily in low-interest rate bonds, which lost value when interest rates rose. Additionally, the bank's management made some serious missteps, such as selling $21 billion of bonds at a $1.8 billion loss, and also selling a convertible bond to the public, which spooked investors and caused a run on the bank. Furthermore, there's the issue of regulation. It seems that the bank's management successfully lobbied regulators to loosen some rules that might have prevented it from taking some of the risks it did. The collapse of SVB is a reminder that even banks that are seen as safe and stable can be brought down by a lack of confidence. Banking is about more than just making money, it's about earning the trust of your customers. And when that trust is lost, the consequences can be catastrophic. So, what went wrong? The recent collapse of Silicon Valley Bank can be partially attributed to the rise in Federal Reserve interest rates. For the past few years, interest rates have been at historic lows, which made borrowing cheaper for both banks and individuals. However, the Federal Reserve has been gradually raising rates over the past year to prevent inflation from spiraling out of control. Unfortunately for SVB, this increase in interest rates had a devastating effect on the bank. The bank had made some risky investments in low-interest rate bonds, and when interest rates rose, the value of these investments plummeted. This meant that the bank's balance sheet looked a lot weaker than it actually was, causing a ripple effect that eroded confidence in the bank. The erosion of confidence ultimately led to a run on the bank's deposits, which then caused the bank to collapse. Essentially, the bank's reliance on risky investments in low-interest rate bonds made it vulnerable to changes in the interest rate environment. When interest rates rose, the value of these investments dropped, and the bank was unable to recover from the resulting losses. The collapse of Silicon Valley Bank has had far-reaching consequences in other countries as well. Canada's financial sector had a severe sell-off of financial stocks, wiping out $19.7 billion in value from the country's top banks in just 4 days. Some of Canada's biggest banks, including Bank of Nova Scotia, Bank of Montreal, and Toronto-Dominion Bank, experienced a decline of more than 2% on Friday. Given that banking equities make up the largest sector by weighting of the Toronto Stock Exchange Composite Index, Canada's main stock benchmark slumped more than the S&P 500. In recent years, Canadian banks have acquired regional U.S. banks, increasing their exposure to the banking fallout from Silicon Valley Bank's failure. SVB had even opened a Canadian office in 2019 and listed Shopify Inc. as a client, which was among the biggest decliners in Toronto on Friday, March 10. Silicon Valley Bank's collapse could affect millions of people who may not be aware of it yet, especially those who use Rippling in conjunction with a Shopify store. The full extent of the impact for consumers may become more clear over the next few business days. The far-reaching effects of the Silicon Valley Bank collapse is difficult to predict with certainty, as it will likely have hefty consequences that will affect various stakeholders in different ways. Overall, the collapse of SVB underscores the importance of effective risk management and regulatory oversight in the financial industry. So, we advise you to keep yourself informed, with the inevitable fast and furious updates concerning this situation, because we believe a knowledgeable consumer is by all means a powerful consumer. We are ChatGPT, and as always, we are incomplete.